Welcome to the commodity section, and here we're looking at gold here, and the important aspect here is the midpoint, the 1250 has been breached, and we're looking for further downside to come through here down to 1230. Now, two things here. Currently we have three waves down, this 1, 2 and 3 here, so that can be labeled as an A and a B and a C. Secondly, we also need to consider it being wave 1, wave 2 and wave 3, and then we'll have wave 4 and wave 5. And I think that's probably the case because of the speed that this is coming down through here. Normally the A wave here is the sharp one, and wave C here is normally the lazy one, like this here. So it's more of an angle than the wave A here. But in an impulse wave to the downside as wave 3, then you would see wave 3 being sharper than wave 1 here. So expect further downside once the market's finished dealing with its correctional pattern at 1240, then expect it down to 1230 with a bounce that can come back and retest 1240 and then move down from there. So just to run through that again, we'll put 1240 here. So we'll be looking at the correctional pattern in here, wherever it finishes, then a move down into here and a retesting of supply back up at 40 and then down from that point there. And the other reason to help this along a little bit is silver, and silver's been is a better short trade. I don't know about better, but it just tends to be a bit weaker. And this is just the daily chart here, and we've been looking at this, moving across here and becoming being on this side of it of trading level, major trading level 2, $20. So just drilling into that here on the 4-hour chart here, we could see that from here before that we had support and then we had resistance over here. We had a short trade in here, but we got stopped out at 1983. Unfortunately, should have had the stop here. Shoulda, coulda, woulda. So there we go. But we're still looking for further downside here, and we're looking at 1800 down here. So there's still plenty of scope here. The first bounce off the 1900 is here, so just observe that. It will be support, then become resistance. You don't have to sell at resistance. It's just technically better, but you can build trades have orders at all different prices through here, and it's good to have positions at different prices rather than having it all in one load at one price, because then if you've got them at different prices, then you can work the trade better. Right, the copper market is doing what we figured it would do. So coming down to the midpoint, the pivot in group 1 here, the 10, 20 and 30 here, all of group 1 here, there'll be a bounce off the 320 here. And we're looking at this in the bigger picture too for copper, in terms of basically an A wave to here, a B wave to here, and a C wave up here. Now, it is possible that this A and B and C here could be all of it, and we could just have 5 waves coming down through to here. That's plausible. Both are there. Now, this A wave here as a minor wave A, and then we've got minor wave B here, and you might think to yourself, well, Pete, that's a little bit small compared to this particular structure here. But that's the way that the structure of markets works. You normally have something that, when you're using Elliott, people know that if wave 2 is simple, then wave 4 will be complex. It's the same with corrections as well. If this one here is simple, then the next one will be complex, and the next one will either be simple or more complex. So it's the same with this A wave here as well. This is rather complex, so the B wave will be sharp and simple, and then the C wave will move up from there. So anyway, we're just looking at counting the 5-wave structure down through to here. So we may see a turnaround in this soon. The oil market looking well. Looking for our 5th wave up through here. But as I mentioned the other day, the natural thing here, I might just bring up an intraday chart at 98 here, is to see a correction, a pattern across there. So the arrival, the reaction, the first high, and now we'll see a corrective pattern come into play here of some description, and we'll be looking for support here. I was also looking at Brent the other day too. So support on 98 creates the next move up. So the Brent here at 108 here, it hasn't got support yet, but do keep an eye on it, because it should move up here further, then have a bit of a corrective pattern, and then move up from here as well. So the bigger and uglier the correction, the safer the next trend to the upside. This is the accumulation process, and the trend is mainly the distribution of that accumulation process. Richard Wyckoff's work. Soybeans has snapped back a little bit here, but because bottom line is, because we're under 1300, the closest largest number, we have to consider the market weak, but we also negative basically. So we also know that this number here is really important, the 1272 here. So the market is above that. So any short trades being added to here would have to have that 1272 as the resistance there for any short trades here. So, but while it's in this space here, I was sort of considering, there's still two counts here, but I sort of favor this one the most, with 5 waves down here for one, an A and a B and a C back through to here, and then down from here. I'll just have a look on the intraday, see what overlapping, we don't have overlapping wave structures just yet. Well, we do a little bit, but while that 72 is the support there, then we have to look up at 1290 up here, and then folding over from that point there. But as I said, that 1272 needs to become the retested resistance to confirm the downside. The wheat market is still bouncing along the 550. All the commodities are up, but yeah, look, still looking at this bouncing across here, then further downside to here as well to complete the move down. The corn market is showing some strength to the upside here, but we don't have tested support yet back on top of group 1 here, so that can push up here higher, and then we'll look for an ABC back through here as well, and then a move up through here. So it hasn't tested it as support yet, and I can see that this is a bit of a third wave here, so there'll be a fourth wave here, fifth wave up here, and then back down. But tested support on 433 is what would be looking for to the upside there to trade long. So expect to move above it, and then a correctional pattern. But after that, if it finds support on top of it, then buy new highs, so to speak, because it will continue going up. But it does appear to be a little 5-wave structure here, so we'll see something like this. This only may come back down to here or something and move up from there. But it is building nicely here for a longer trade to the upside here. Okay. The orange juice, as you know, we're looking for an A wave, a B wave, and a C wave. Now, I thought the C wave would come down further, and it still may. We may end up with a situation where we've got 5 here, an A and a B and a C here, and then 3, 4, and 5 to finish it like that. I don't know, but we can't go long until we've got 140 as a really good tested support here. Okay, so that's the main thing here. And if it is going to be an ABC rally, then we'll be looking for it to move to this area through here. But it does, I don't know, it appears third wave here, fourth wave in here, and a fifth wave here. So an A and a B and a C, and then a move up to that point. But let's just see how this support, if it develops support on the 140, go for it, put a stop under here. If it comes back down, then you're out there, or maybe even, take, as an example, take 2 positions here on support. When it moves up here, remove 1 position and keep the stop here. And if support comes in on 433, then we could add back to that particular trade those numbers. Just a rough estimate, just to say to manage the situation, so you can get out of the situation, break an even. All right, well, that's it for the commodities. I mean, one of the things is too, we've got just in case you don't look at the Forex section here, but the US dollar here, as you can see here, is pushing to the upside here, and we're actually looking at this being a 5-wave move to the upside here. 1 to 2 to there, a 3 that's not finished, a 4 and a 5 here. Yeah, this higher US dollar in the days to come can place pressure on those commodities. So just kind of get a feel of what's sort of occurring there as well. So if you see the US dollar pushing higher and the commodities struggling to rise, well then you can have a short reasonably safely. All right, cheers.